Big question with this video today. Is it time to move and really rotate out of some of these AI techs like Nvidia, which has dropped more than 14% from its highs, and into the next wave of potential winners? We are talking about names like Palantir, which is already down 25%, and even smaller players like CoreWeave, that we are seeing a 60% decrease since June, which is kind of crazy. Now, when we start looking at some of the mega cap names like Alphabet, which is massively backing AI buildouts. They are still aggressively building into infrastructure. Analysts are saying it's not the time to chase the multi-baggers. Instead, it's time to move into some of the proven, very high quality companies. So let's go ahead and break this down. Look, the sell-off over the last week has hit a lot of people hard, and not just all about those AI stocks that we're seeing. And they are not all created equal, even though some of the biggest names have dropped. The NASDAQ overall is only down about 7%, which means this is not a market collapse, regardless of what you hear in social media and on the news. The market has not crashed. It suggests more of a target reset for some of these larger companies, not a systematic meltdown like we seen back in the dot-com bubble in 2000. Some of the pressure is rooted in very real structural risks. When we start looking at sky-high valuations for these AI companies, massive capital expenditures. We are talking billions of dollars, and uncertainty if the Fed is going to continue to cut rates in December. It kind of thinks about it, and crucially, it is not about those chip juggernauts like Nvidia getting hit and really pulling back. Smaller, aggressive AI infrastructure like CoreWeave are feeling the absolute strain when it comes to the pullback. Big names do the pullback. Investors are urged to chase smaller companies or really the next generation of AI companies we see out there. The hope, the lower, and really the future breakout is going to go mainstream and getting into these companies. Well, we have a strong pullback, but the truth is, it is incredibly difficult to pick exactly who is going to do this, especially when it comes to professional traders. Just look at Nvidia rising over 1,400% since October of 2022. No one's seen that one coming, or very few really did see that drive coming. Some experts are urging with caution rather than swinging for the fences, really making a smaller, sticking with proven companies that have a long-term staying power. Now, when we start thinking about staying power and when we start thinking about these companies, I always refer back to Warren Buffett's old school investing approach. He is one of the most famous investors we've ever seen. Look for great companies at a fair price. It's not about the lottery ticket that you're buying. It's not about really looking for the next big breakout. Yes, selling off some of the AI stocks for a lot of people are going to be incredibly painful, but it could also be a reevaluation of opportunity, not really a time to lead blindly into the hype that we're seeing with AI. And again, a lot of people and a lot of analysts are saying that the AI tech stocks cannot go up forever, that there is going to be a pullback at some point, and even seeing the 7% we are right now doesn't mean it could be 10, 12, 15% in the future. When you start looking at companies that are anchored really with a strong business, good balance sheet, and really a competitive advantage in real earnings potential, you may not catch the next Nvidia, but of course, you're going to compound your wealth for years to come. So still small with AI, and some of these do carry some risk. So there are a few catches to this. CoreWeave, for example, is burning a crazy amount of cash. That is the reason why they were down 60%, trying to fuel the AI infrastructure. They are going through cash like it is water. If interest rates remain high, capex can become very expensive in finance. And this is when we can actually see companies burn up in their entirety. Now, valuations for these tech and these AI companies are still very high, even for the up and coming names, and even some of those big names. The tech evaluation, the P/E ratios are still absolutely sky high. And there is a lot of speculation for companies if they never reach profitability like CoreWeave or scale as investors are really hoping. So what does it look like when it comes to a smart rotation or moving some of these? So rather than jumping into unproven names, focus on companies that already have kind of AI exposure and very strong fundamentals as well as strong balance sheets. Thinking of big cap and really rich companies, firms like Alphabet are doing incredibly well. They're pouring billions of dollars into data centers, capex, and really looking at owning and having it in part of your portfolio. What is going to be that next year? You don't want to bet your entire portfolio in AI or speculative companies. This is where a lot of the foundation comes in when you start looking at a little bit of a pullback. give you an opportunity to actually rebalance, not swinging for those home runs and really investing everything in those AI companies, but getting more into the practical playbook of the foundational costs. Now, when we start looking at the practical playbook when it comes to investing, and something that I always do, number one, dollar cost averaging into any names that you like. We are not going to lump sum all into one. We are going to invest into these on a very small portion in dollar cost averaging through an extended amount of time. Now, you also want to look at your portfolio in the entirety and set review periods when you really want to make sure that what you're looking to do financially, your investment portfolio does align with it. This could be quarterly, this could be semi-annual or annually. Check whether and really does your thesis hold up to what you want to accomplish with that investing portfolio, and keeping your core position really strong. When you start looking at high quality names, when you look at something like the S&P 500, looking at the VOO or the VTI, two very and foundational core positions that we'll always have. I run them at about 40 to 50% of my portfolio in the entirety. And I know when you look at that portfolio, Nvidia and a lot of those big names do have a large chunk of that S&P 500, but it also does give me exposure to the rest of those 500 companies within the S&P 500. And just because a stock looks cheap doesn't mean it's always a winner. Be strategic when it comes to investing, not emotional, and not buying into the hype and letting FOMO take charge. And that's what I see with a lot of investors. So here is how I am thinking about this kind of big picture. I do not want to abandon any of those major AI names entirely. Like we're looking at Nvidia, and you're looking at, when we talk about Alphabet, when you talk about Meta, when you talk about all of those companies, I believe long-term truth, they are going to do incredibly well, but also opening and rotating part of the portfolio into something with a little bit more stability. And it could even end up, as much as painstakingly as it says, the SCHD or something that is a little bit more of a defensive move, looking at high quality firms that have really strong fundamentals. That is exactly what the SCHD does perform in. And honestly, if we see a pullback, something like the SCHD is still going to perform incredibly well with those blue chip companies. For me, it's not about timing to the top within the investment. It's about having the clarity, discipline, and strategy that supports building that generational wealth in the entirety. So what about you guys? Have you considered selling off and really pulling back or scaling back on some of those AI winners like Nvidia, betting on a couple smaller companies, possibly CoreWeave or Palantir? Or do you trust those blue chip stocks like we were talking about, the SCHD, or really in keeping the lead within the future and playing again that defensive node? Drop a comment and tell me exactly about your approach. And of course, if you found this video helpful, definitely hit the like button, subscribe, and join me every single day for financial education. We're building clarity, confidence, in long-term wealth. Thank you for watching, and I'll catch you in the next video.